Friday, December 5th, 2025, Maneco 64, home of alternative economics and contrarian views. Good morning, Clive. How are you doing?
Hello, good morning to you, Mario. I see Silver's doing what's written on the tin.
Yeah, it's been a kind of a battle this week. Uh, I think the last few days, with the exception of today, every time silver got up to like near 59 in the spot, we'd see an attack on it very, very sharply. And they took it down quite a bit yesterday as well, but it's like a beach ball almost. It keeps coming back up. It's at 58.25 now. It's been as high as 58.53 this morning. And I sent you something from a post from Bullion Star, and I'm going to share it here with you and the viewers. Bullion Star, there in Singapore, of course, and it says record silver prices aren't slowing demand, they're accelerating it. Lines formed outside our bullion center before we even opened. This week's silver sales are already up 84% versus last week, with 3 days still to go. Customers are buying more silver at record prices, not less. This is what real ground level physical demand looks like. And you thought that was interesting. You made a comment. Maybe you want to tell the viewers what you think that could imply in the future.
Well, of course, the two languages in Singapore are Mandarin and English. And so I'm kind of wondering if there's been some sort of social media event or something like that, or some video which has gone viral, which is causing people to line up and buy the silver. But if it's in Mandarin, of course, that might mean this mania in Singapore is going to spread to China. We don't know that yet. I've seen nothing coming out of China yet saying that people are queuing up to buy silver or gold.
Yeah, I interviewed King Kong the other day, Eric Young, and he said that he has a friend who bought a lot of silver for his house, stuff for his house a few years ago when silver was below $20. And now, with silver above 50, this friend of his is like bragging about the silver and really flashing his silver around because it's more expensive. And what Eric said, being Chinese, is that he expects that the higher the price goes, the more people are going to want it. It's going to be like flaunting your wealth. With silver at $20, it wasn't like worth it, but maybe at 100, 200, or even 300, it's going to be, could be the new gold, so to speak, in terms of flaunting what you have. Is this
Well,
the experience you get as well from being to China several times and knowing the Chinese more than I do, of course?
well, I was in China about a month, maybe a month and a half ago. I tried to. I mean, I went to a lot of gold shops. These are big, tall buildings. They're coloured in gold. They usually have dancing girls outside, or maybe the face changing routine to attract the customers. There were customers in the shop, but the customers were in the shops, but the shops were not full, which meant that as soon as I walked in the door, I was seen as a target, and a girl arrives immediately with a cup of tea for me and starts showing me their goods. The prices were very fair. For example, for very small bars, like 50-gram bars, which are decorated, beautifully decorated, it was about 13% over the international gold price, which allows for potentially, the workmanship and the sales tax. But it wasn't crowded. I wouldn't say it was crowded. And I talked to people, my wife's family, who are from China, and I asked them, "Are you interested in gold?" And basically, there was no interest really. So I don't get the impression yet that there's any fever in China. And I also happen to be a shareholder in an international, it's Hong Kong and China, gold dealer company. It's called it's quoted on the Hong Kong Stock Exchange, called Luck Fook Holdings, LUKFOOK. That share price has been up and down for years, but it's basically, it's not right. It's not going through the roof as I would expect if there was some sort of gold fever in China.
Yeah, yeah. I mean, Yeah, it's still early days. There definitely, we don't have places like the one in Singapore here. Maybe up in the West End in London, the Sharps Pixley. But if you're going to buy gold here, you do it more privately. You go into an office. You don't want people knowing that you're selling gold. So I think that's maybe why. And people are doing it more online here. But I would say, Clive, that business picked up here in the run up to middle of October because people always buy things when it's going up. And then when it corrected from like almost $4,400 down to like below 4,000, from what I've heard with people that I talk to, precious metals dealer, things slow down. So, yeah, people always chase things instead of, like you've said many times, doing dollar cost average or even just waiting for a big correction. In terms of silver here, I wanted to buy some yesterday, but I looked, the prices are like you're paying like 60 pounds for an ounce, and the spot price is 42. And you've got a big premium plus the VAT. So I think that might discourage people, even though I think longer term you shouldn't worry about the VAT. Maybe I will buy some if I find a good deal. But Clive, I sent you as well. I think I'm not sure if you got it. Something about an executive order that President Trump signed back in August, and I'm going to bring it up
Oh
because
yes.
I heard someone talk about it maybe on X, and very few people are actually, especially in the gold space, mentioning this. And it's yeah, orders, right? August 7th, 2025, democratizing access to alternative assets for 401k investors. And yes, let's have a look here. They're talking about that they want to make commodities and also it's right here, direct and indirect investments in commodities. So I would say that's like the physical commodity, i.e. gold and silver, or the mining companies, right? And they've got a lot of other stuff like I think private equity and everything else. And the U.S. Secretary of Labor has 180 days from August 8th or 7th, I forgot exactly, to decide whether this is like, yeah, to give guidance on this executive order. And then from then, which is the beginning of February, like providers of 401ks, which are the companies people work for, right? And also the fund managers, they will decide whether they want to follow this executive order. But I had a look, Clive. 401ks, they're different from IRAs. IRAs are your own. Anyone can start an IRA and they can put, I think, $7,000 a year maximum. While a 401k, if you work for a big company, they will give you a 401k account. You can put up as much as $23,000, I think, and they will match it as well. So it's a lot. It's quite it's a good deal. And but unlike IRAs, where I think you people who do a lot of gold and silver IRAs, they can't do it on the 401ks. So I think from February, it's highly possible that we could see a lot of money going into the mining sector from the 401k policies. And I think they've got about 9.3 trillion in there. I think IRAs have even more, 18 trillion, but the IRAs already let you put money in several places. I hadn't seen that until recently, even though it was passed in August. I think the focus was on private equity and people didn't realize it's also commodities. So just want your opinion on that.
I think the rules relating to the 401k are quite complex, and that the result of that is that some of the investment managers aren't that good at understanding rules. They've made mistakes, they've done things wrong, or they've innocently done things wrong in trying to make money for their clients. And there's been a lot of lawsuits where people have sued their their 401k providers, and obviously that's creating a worry for other 401k providers in as much as they have drawn in their horns and they're being very, very cautious and just investing in very safe investments like government bonds and things like that. And I think what this is trying to do is to ease up the rules so it's less hard or less easy to fall into the traps of doing the right thing for your client and then getting sued for it. So yes, it obviously, I don't know if it actually, I haven't read the rules clearly enough to understand what the impact on gold is, but if gold was not previously allowed, my understanding is it's going to be a wider class of investments which will be allowed, maybe gold miners in the future. And hopefully by doing that, it means that those people who try to do the best things for their clients by investing their money, perhaps in gold miners or whatever it is, won't get sued when it doesn't work out.
Yeah, and you said well, you said already over a month or two ago that people are going to be questioning their fund managers in the beginning of 2026. You know, why haven't you put any money in gold and silver or the miners? I mean, Bitcoin is down like 1% year to date, and it seems like the focus, even of the Trump administration and like a lot of people on Wall Street is on Bitcoin, while silver is up almost 100%, Clive, and gold is up like 60%. And it's almost like it's not even talked about. And I saw it this morning, Clive, on the FT. The main story is about stocks, you know, not about the fact that gold and silver have done really well, but U.S. stock sets for double-digit gains in 2026, say Wall Street Bank. So bullish forecasts come despite recent jitters over tech spending and potential bubble in the AI sector. So yeah, it seems to me that gold, silver, the metals, and even the miners that are up even more, but I think still have a lot to catch up on. They're still forgotten, and
Yeah.
I think eventually people are going to wake up and say, "Why are you putting some of my money in this?" And even if they don't put like everything in gold and silver, even if they put like 5 or 10%, it's gonna make what this year did look like a picnic, don't you think?
Yeah. I think my advice to any portfolio manager is you need to have something of everything because when you face your clients 6 months from now or 3 months from now and you're talking about last year's performance, the 2025 performance, your clients are going to be wanting to hear about the good things you bought. You could, if you bought something which went down, it doesn't matter. You can just ignore that. But you've got to have some good things in your portfolio. And obviously, this year the two good things have been tech and the gold and silver miners. So if you're missing out on the gold and silver miners, you better get some. And of course, the problem with tech is it's had its bad days, and there's a lot of stories going round, which does mean that it looks kind of fragile. It's not for me to say that it's about to crash, but you only have to open up the social media and look at this, and the world is awash with people saying it's overpriced, it's ready to crash, it's going to happen next week. Then it goes down a bit, then it goes back up again. But you know what I'm trying to say is you've got to have a bit of everything, so you've got some good news to talk about. And most investment managers do not have the gold mining sector, they do not have the silver mining sector in their portfolios, and they really should hurry up and get it.
Yeah, and I mean there are some. I think Stanley Druckenmiller. I guess yeah, he doesn't think like that. He thinks that if you're really convinced about something, that you should go all in. But I agree with you. For someone's pension, I guess they have to be more diversified.
Well,
And
there are examples when you should go all in, and that's when you're 18 or 19 or 20 years old, and you've got your whole life ahead of you. And so if you lose it, you can make it back. But by the time you're investing for your pension, your 40s or your 50s, you have to be in lots of asset classes and not betting on just one because you might get it wrong.
Yeah, no, that's true. That's true. I guess it depends also on the person's risk profile. And Clive, do you? Yeah, I saw that we're not getting the U.S. Jobs numbers today. I don't know why. They've got an excuse, of course, that the government was shut down for so long, but they're already publishing other numbers. So it just doesn't. To me, it sounds like they don't want to bring out the really bad numbers, so they're delaying it. Could I be wrong, or what do you think?
Well, I think it's true because don't forget to have the number, they had to gather the data, and if the staff were all sitting at home, they obviously weren't gathering the data. Therefore, the number doesn't exist, or if they do, if it does exist, it's a very flaky number because it won't have enough data in it. And I think the real problem we got next week, we've got the, well, for a problem, let's just say next week we have the Federal Reserve FOMC meeting on Wednesday when they're going to announce probably an interest rate cut of 0.25%. But a lot of the data that the Fed would be relying on is now 2 months old. It's out of date. So they're, to some extent, still flying blind. They don't know for sure what the real inflation rate really is at the moment. It's supposed to be 2.8%. That's the expectation. But it's certainly not down to the 2% that they were hoping for. But the market seems to be convinced they'll cut the rates anyway.
Yeah, I think they will cut, and the also the apparently the bond investors or the bond market is warning about against Trump nominating Kevin Hassert. I think that's his name, because they think he's going to just follow what Trump says. But Trump said he's going to, well, a couple of weeks ago or last week, he said, "Oh, I know already who I'm going to pick," and people were thinking that he was going to come out with a name, but now he said he's going to wait until the beginning of next year. So he's keeping people like speculating. I wanted to move over to gold and Italy, and I'm going to share this article here that came out in the FT over a week ago, I think, December, no, actually December 3rd. But yeah, it says ECB urges. Oh, yeah, I think the Maloney comment was before December 3rd, but it says ECB urges Giorgia Meloni's party to rethink declaring Italy's gold belongs to the people. Any law affecting legal status of gold reserves would risk Bank of Italy's independence, warned central bank. Well, I sent you that thing from the ECB, right? And it was written, I think, by Lagarde, who's a lawyer, and she basically said that yes, it does belong to the people, but it should be managed by the Bank of Italy and indirectly by the ECB. Is that the way you saw it too?
Well, I read her letter, and reading between the lines, I think she's ridiculing Italy for pretending that they can steal the gold which belongs to the Central Bank of Italy, which is an independent organization. That's kind of how I read it. Now, she doesn't, it's not, I mean, she uses the word Italy should rethink, but you know, there's what they're saying is there's a law in the EU which basically says the gold has to be managed by the central bank and owned by the central bank. So unless Italy leaves the European Union, there's no way Italy can pass a law to usurp the European law, which is higher than that, saying it belongs to the central bank. So if Italy leaves the European Union, which is not planned at the moment, then they could pass a law saying the gold belongs to us. But if they do it now, it's like a father saying to the child, "You have to do your homework," and the child saying, "No, I've got a better law. I'm allowed to watch television."
Yeah.
They can't do that.
Well, the thing is, the goal that yeah, I would say the goal that the Bank of Italy doesn't belong to the Bank of Italy, it belongs to the people because uh, the only reason they have that is because Italians worked and they've kept it in the banking system and they left the gold standard in the 30s, I guess. But
That's
and the
what, that's
Bank
what,
of Italy, I don't think is really independent. I mean, it's created by the state. So I agree with Meloni, and I think that would be great if she left the EU and claimed the gold back. I think they realize, Clive, that the gold's been used for nefarious purposes by the central banks, i.e., leasing and manipulating it. And I have a story actually, and it's speculation because when I worked in the city, when I worked for ABN AMRO Bank back in the late 90s, mid to late 90s and early 2000s, and this was before the 2000s, late 90s. We had I worked a lot with Italian financial institutions, and one of the big banks in Rome, they always had a 400 lot short position in gold, like which is quite big, 400 lots, and they kept just rolled over every whenever it came to maturity. And one time the gold market I think was very volatile and they increased margins, and I called the my client in Rome and said we need some more money for this gold position for the margins. And I thought she was going to say, oh, let me check with the client, this could be a problem. He said, okay, don't worry, we'll send it. And I didn't think much of it at the time, but then from what I've learned about central banks and gold, is that they always try to keep it under control by leasing it. So I think they were doing that, and we are probably just one of the many banks they used to do that. And you kind of wonder if, maybe Maloney. I saw as well, Clive, that recently they said they wanted to impose taxes on people selling gold. So they're desperate for funds. So I think they want the gold back, or they want the gold from the Bank of Italy. It's going to be interesting to keep an eye on this development, don't you think?
yeah. I mean, if the government does take control of the central bank's gold, what are they going to do with it? That's, I guess, the question. Are they planning to sell it, or is they going to are they going to do some sort of magical trick with the accounting to ostensibly reduce their debt levels?
That could be part of it, or I don't know. If they leave the EU, they'll go back to the old currency, the lira, and maybe they'll have some kind of gold backing. Who knows? Because I don't think the Bank of Italy would be, and the ECB would be too happy with that, because I think they're very pro-euro. Yeah, it's something we need to keep an eye on, I think.
Well, if they go back to the euro, we can all play a guessing game as to how many zeros they're going to put after the one on the
Back to the
banknotes.
lira, you mean? Yeah.
Yeah, so if they go from the how, 1 euro makes how many lira?
I think it's
10,000, 100,000?
I think it was the rate they did it at was just under 2000. So yeah. Um,
I mean, I remember in the old days when I used to go to Italy in the car, you had to be very, very careful with your banknotes, especially in petrol stations, especially at night, because
mhm.
you'd hand them a large note, like the equivalent of, let's call it 100 euros today, whatever it was in lira, but that would have a lot of zeros on it. And the petrol attendant would then say, "Oh, you haven't given me enough. You've only given me a note for 100,000 lira, or instead of a million lira." And because there's so many zeros, you're not sure about the notes. You're not sure you gave the right one, and that was how they tricked the tourists to get a little bit of extra money. So you had to always, whenever I went to a petrol station, started to learn the rules. You always count out the precise amount, if you can, in the notes, making sure you've got the right number of zeros on every note.
Yeah, so I've got it here. What did you know? 20 Italian lira back in the days of the gold. I think the Latin monetary union of the 20th century. it was just like the 20 franc gold coin. So it was 1 to 1. Just goes to show how much they inflated that in the 20th century. But you can see here, where is it? Kind of lost it now. Where is it? I've got the rate here at which they converted to the euro. I'm just trying to find it. Uh, oh, here we go. Introduction of the euro. The conversion rate was 1,936.27 Italian lira. So
Yeah,
that,
so if you had 100 euros, there'd be a lot of zeros at the end of that.
yeah, it will be like 200,000 lira, I
Yeah.
guess. Yeah, I remember with 5,000 lira, you could get like a croissant and a chocolate and a coffee, I guess, or something like that, or a sandwich. Because I remember using the lira in the, I used to do a lot of business trips there in the mid 90s. And yeah, 5,000 lira wasn't that much. So
I mean,
anyway,
Italy's a lovely country these days, but I back then, before the when the lira was, I didn't like going there. Everybody was out to get your money through the back door. Little tricks, extras here, there, and everywhere. And of course, it was a dangerous country because everywhere on the roads, I'm talking about, everywhere you went, there were car accidents non-stop, including fabricated accidents.
yeah. Clive, anything else like that you've seen this week that you think is interesting? Any interesting videos you made about like let's say the miners, how you seen? I noticed yesterday, Clive, that despite silver being down quite a bit yesterday again, that the silver miners were almost unchanged. So I thought I think silver will do well tomorrow, and it kind of has. I think we might see another move higher this afternoon when the U.S. Market opens.
Actually, it's funny you should ask that because for weeks and weeks I've had messages coming into my LinkedIn mock box, more than one a day, I would say, asking what my favorite picks are in the gold and silver mining sector. And I've been struggling to answer because the last time I did a study of that was 3 to 6 months ago when I did a couple of videos about it. And that's why I'm getting all these messages keep coming in. So I decided earlier in the week to restudy them. And I've just as we're speaking, I'm uploading. It should be uploaded by the time people watch this video. A video which is the result of I've gone through all the miners again. I've taken about 200 of them, reduced it to a short list of 20, and from that short list of 20, I've reduced it to a very, very short list. I won't say how many, but anyone who wants to see what my final picks in the gold mining sector and platinum are. Have a look at the video, which should be uploaded by the time you finish this video, Mario, on Clive Thompson.
Yeah.
All I'll say, they're all large companies, they're all profitable, and they're all going to have higher production in terms of number of ounces in the years which follow.
Yeah. No, the other thing, Clive, I don't know if you agree with me, is now that, and we're going to look at the gold silver ratio. Now that that gold silver ratio seems to be favoring silver, wouldn't you want to like weigh some of your mining investments more towards the silver miners?
Absolutely. I haven't identified any specific silver miners in the video, but I can tell you, Mario, I've done some research on the silver mining sector, and I'm not going to say the names today, but there's a couple of very, very attractive silver mining companies where the price should be down the line based on the current price, or even a price of $50 or $40 if you like. The price of those silver miners a year or two from now should be several multiples of where they are now. So people should be looking at the silver mining sector. If they don't know what to buy and they can't wait for my video on it, then I think they should just buy the exchange traded funds, which owns all of them.
Is
There's
it
one which has got the
SILJ?
yeah, there's two actually. There's one SIL, which is the major silver miners, and one which is SILJ, which is the junior miners. There are other silver mining ETFs out there. I would buy the SILJ one as opposed to the SIJ. The worry I've got with the SILJ, even though it's probably going to perform very well, is an awful lot of those juniors don't have any profits.
Yeah.
And therefore, some of them, a lot of them probably, will run out of money in the next year or two unless they can raise capital. Whereas if you're with the major ones, that danger isn't there so much. So whilst juniors should perform better than the majors in a bull market, I think that's only true of the juniors who are making profits. The ones which have just got a hole in the ground and waiting to get finance is not quite so true. So I would probably go for the majors, the SIL, rather than the SILJ.
Yeah, one thing I've done in the past as well, Clive, when I wanted to invest in miners and didn't know what company to buy, I went into the prospectus of the ETFs or the funds and looked at the companies that they own because they do publicize that. So if you don't really like ETFs, you want to buy your own shares yourself, do that, and maybe look at their list of holdings and take one that is in the top five, one that is in the middle, and one is that is like not as owned. Maybe mix it up as well. So I was talking about the gold silver ratio, Clive. I'm going to put it up on the weekly chart. You can see better that I had this level here, which was important to break. And right now, as we speak, we're below it. We're at 72.65. So it's breaking down. It's broken down also this trend line from 2011, which was here and here. But I guess you can maybe if you bring it here as well, it's broken down as well. And if you put it on a daily basis, you can see that we broke this 73 level here, and now we retested it, and it looks like it's going back down. So I'm quite bullish silver. I think a lot of people were saying that we could see $60 silver spot this week. I'm not sure. It's still possible, but definitely before the maybe next week. I think silver will test 60. And the reason I'm showing the gold silver ratio is that every time there's a major bull market in silver or in gold and silver, excuse me, this ratio does really drops really sharply. It means that silver is outperforming. So let's do it a monthly so people can have an idea. So you can see that in 1980 here, when we had the top in the precious metals bull market, the gold silver ratio went to 15 to 1. And also in 2011, it went to around 30 to 1. Some people don't think it can get back to 30 to 1. I actually, Clive, think it can get back to 15 to 1. So I think there's still a lot of room for silver to outperform gold. It doesn't mean to say gold is not going to keep going up. It's just that silver is going to be a stellar performer, in my opinion. Where, in your opinion, do you think this ratio could drop to? Are you one of those who don't think we'll ever see 15 to 1 again? Like we saw it in 1968 and 1980. So I don't see why it wouldn't be possible to see it again.
Well, there's no reason why silver shouldn't get to something like 5% of gold's price. So if gold is 4,000, that would imply $200 on silver. There's no law saying it can't be. I think one of the problems most private investors suffer from is they look at a graph, and when you see something going up, it's always at the top of the graph, and they assume because you've got this graph, it's at the top and it can't go any higher. And then 5 years later, what looked like the top is sort of a quarter from the bottom. So what I urge investors to do, when you're looking at a chart, always make sure the finishing level is halfway up and halfway down, so you don't get confused by the fact it seems to be at the top. Because I've had a lot of over the last 3 years, really, I've had constant messages saying, it's too high. Whether we're talking, it doesn't matter what we're talking about, but we're talking about stocks or we're talking about gold, silver. It's too high. I'm going to wait for a pullback. And of course, those people never got the pullback they were waiting for. And the reason they said it was too high was they looked at the chart. It looked like it was at the top, therefore it can't go above the ceiling. And then that ceiling moves higher. I think the price of silver will also depend on to what extent we have a depreciation or a confidence crisis related to currency. If at some point we have a crisis of confidence related to currency, I think there's going to be a huge rush by private individuals into silver coins of every type because they don't know what's coming next. And that could easily drive the ratio, well, beyond 50, down at 50 to 30 or 20, which is sort of more like a long term, very, very old ratio.
Yeah, and I also think we're seeing big institutions like very wealthy individuals buying silver. Yeah, of course, the silver stackers, they're kind of a they are retail, but they're a class apart, let's say, from the general public. The general public hasn't really woken up. And we're also hearing now, Clive, that India and other central banks in the Middle East and even South Korea, they're starting to buy silver. So um, I think what it means as well is it's a run on the bank. When you buy silver, it's like going to the bank and giving them the banknotes and saying, "I want my silver." People don't see it like that, but you know, up until the mid to late 60s, almost every Western country had still silver coinage, right?
And that's right. I mean, I've got a nice collection of coins from all around the world made of silver, which I picked them up a little bit over the years from here and there and everywhere. But yeah, it seems like before, well, if in the UK before the 1947, but in most countries below before the 1950s, most countries had silver coins in circulation.
Yeah, yeah. Um, I don't know if you're following the bond market because the Japanese
Japan, yeah.
yeah, the Japanese 10-year yield is almost up at 2%. And it looks like the Bank of Japan is going to raise rates. And if the Fed cuts rates, I could see the yen rising. The dollar seems to have topped against the yen already around just below 160. I could see that maybe. Yeah, affecting this liquidity because of the yen carry trade. I think the most important thing for the yen carry trade is that the yen remains weak. But if the yen continues to appreciate or the dollar continues to drop, I could see that as a problem. Isn't that the way you see it too, Clive? Or
Yeah, I mean, a lot of people have engaged in the carry trade, but as the yield on Japanese bonds rises, that makes that trade less attractive, and there'll be some people who are completely at the wrong end of it, and we'll have to wait and see if anybody gets into a panic. But what we're seeing is a rapidly rising yield on the 10-year, the Japanese 10-year. That yield is going up quite fast. If we look back, let's say to October, it was at 1.6. Now it's at 1.95.
yeah,
So that is a yield going from 1.6 to 1.95 is a huge change, and something somewhere is getting squeezed. We can't tell what it is, but it does seem very strange that it'd be moving so fast, which kind of implies that someone's in a very stressed position. Don't know who it could be. It could be a Japanese bank. It could be an international bank. Who knows?
yeah, and the other thing about the carry trade is that uh, you want to have a weak yen, so you borrow in that currency, which means you sell it in the FX market. Then you receive, let's say, dollars or pounds or euros, and then you take those proceeds and you buy high yielding assets. So you don't want the yen to go higher because to pay back the loan, you need a lot more of the other currency. So yeah, so the fact that, since the beginning, since April, we've seen the stock market around the world do really well, and the yen has weakened. So this is the dollar rising versus the yen. It used to buy 140 yen in April. Now it buys 155. But I know people who are expecting the dollar to go to 160 or even above it, but it looks like it's turning now, Clive. It really looks like we could see a weaker dollar and a stronger yen, and that could put the liquidity, yeah, a lot of the liquidity out there in the financial markets in question. So yeah, keep an eye, especially if we get also above 2% in the JGB 10-year yield. And keep an eye on the dollar. If the dollar keeps dropping against the yen, that's bad news for everything, I'd say.
Actually, the dollar's come off quite sharply in the last few days. It was at the DXY, the dollar index was at 100. And I saw yesterday it was at 98 something, which was quite a big move in a couple of days. I'm just looking to see where it is now. The DXY is currencies. It's 98, 96 now. It's come back a little bit. But it was, a couple of days ago, it was a week ago, it was at over 100 and 100.2, something like that. And now 10 days later, it's at 98.9 now, which
All
is
right.
quite a big move for the dollar
Yeah,
down.
yeah, yeah. Okay, Clive. So yeah, any final thoughts before we wrap up for the
So if anyone would like to know what my top picks in the gold mining sector is, the video will is now up on YouTube. Clive Thompson is the name of the channel. Have a look and like and subscribe.
Yeah, great. And yeah, I wish everyone a great weekend. And I'll talk to you on Sunday on the live stream. Take care.
Thanks. Bye bye now.
Bye.